You know, DuPont is one of those iconic names in American industry, right? A real giant. Well, that giant is in the middle of a massive reinvention. The company you might have learned about, this sprawling chemical empire, is transforming itself, cutting away huge pieces of its business to become something totally new.
So that's the big question, isn't it? What exactly is this new DuPont? Well, we're going to break down their whole strategy, take a look at the early results, and figure out what it all means for the future, all based on what they've just told their investors. So let's dive in. At its heart, this is a total identity shift. I mean, they're moving away from being this huge, complicated chemical company, the one we all knew, and becoming a much more focused, streamlined leader in, science and technology. So, how exactly are they pulling this off? Well, it's all part of this very deliberate plan to simplify and focus everything, all designed to find new ways to really grow the business.
And at the core of this plan are two absolutely massive moves. First, they spun off their entire electronics business, and second, they're selling their Aramid business. You know, the one famous for materials like Kevlar. And let me be clear, we are not talking about small tweaks here. These are huge, foundational parts of the old company being carved away to create something new.
So why do this? I mean, why sell off huge, successful businesses? Well, here's a good way to think about it. Imagine a master gardener with a big, overgrown bush. They have to prune it, right? By cutting away some of the major established branches, all of that energy gets funneled into the most promising new shoots. And that's exactly what DuPont is doing with its businesses. Okay, so that's the plan. But the billion-dollar question, of course, is it actually working? Well, the company just dropped its third quarter financial results, and they're holding them up as the first real proof that this big strategic pivot is already starting to pay off.
So let's get into the numbers. The new, leaner DuPont pulled in $3.1 billion in net sales just for the third quarter. That's a seriously solid number for a company that just went through such a massive change. And this next one? This is a number investors really care about: organic sales growth. This basically shows how much growth is coming from their core, ongoing businesses, and that was up a very healthy 6%, which tells you the parts of the company they decided to keep are performing really well. Now, let's talk about profitability. The company generated $840 million in something called operating EBITDA. That is a really, really strong sign of the company's core financial health.
You probably hear this term, EBITDA, thrown around all the time on earnings calls. So let's just quickly break it down. Think of it as a snapshot of a company's profitability from its main day-to-day operations. It strips out all the noise from things like interest and taxes, giving you a really clear picture of how the actual business is doing.
And hey, you don't have to take my word for it. The CEO, Lori Koch, called it another solid quarter ahead of our previously communicated guidance. The key takeaway here is they're not just hitting their targets, they're actually beating them.
Okay, so if DuPont is getting rid of massive businesses like electronics and Aramid, what's left, right? Where is all this new growth supposed to come from? Let's take a look at what the new core of the company really is. Here they are. These are the two main pillars of the new DuPont. The company is pretty much betting its future on two key high-growth areas: healthcare, with things like advanced medical supplies, and water, where they're focused on purification technologies.
And you can see why this is working. Sales in both healthcare and water shot up by high single digits. They're basically riding these massive global waves, An aging population needs more medical care, and the world is desperate for clean water. So demand for their medical packaging, biopharma stuff, and water treatment tech is just really strong. These are the new engines.
Now, the other part of the company is called Diversified Industrials. But don't let the name fool you. This is not your grandpa's old-school factory. We're talking about advanced tech for things like next-gen mobility. Think crucial components for the booming electric vehicle market.
All right, so the company's changing, it's growing. That's great. But how does all this actually translate into value for the people who own the stock, the shareholders? Well, first up, a direct cash return. DuPont announced a new quarterly dividend of 20 cents per share. It's pretty much the most straightforward way a company can share its profits with investors.
And then there's this. This is a big one. They also announced a new $2 billion share repurchase program. That is a huge, huge commitment to returning value back to the people who own the company.
So what even is a share buyback, and why should you care?
Well, simply put, the company uses its cash to buy its own stock from the market. This reduces the total number of shares out there, which means each remaining share is a slightly bigger piece of the pie.
It's a classic way to boost shareholder value.
Okay, so that's what's happening now. But what about the future? Well, with this transformation in full swing, DuPont is laying out some pretty ambitious targets, giving everyone a clear roadmap of where they plan to go from here.
And here's a look at their confidence, spelled out in numbers. For the next few years, they're aiming for steady sales growth of 3 to 4%. But what's really impressive is the profit margin expansion and that powerful 8 to 10% annual growth in earnings per share. And on top of it all, they plan to turn over 90% of their earnings into free cash flow. That is the sign of a very, very efficient business.
And just to show that this isn't some far-off pie-in-the-sky plan, they actually raised their earnings forecast for the rest of this year. That's basically putting your money where your mouth is and telling the market, hey, this strategy is already working, right now. So that brings us to the final, critical question. DuPont has made some really bold moves. They've created a leaner, more focused company in some really promising areas like healthcare and water. The early results look strong and their goals are ambitious. But the real test, the big unknown, is whether this reinvented giant can navigate what is a very complex global economy and actually deliver on all these promises. I guess only time will tell.